Good afternoon, folks. Joe with you here on a Tuesday. It's the 4th of April, getting into the beginning of the first week of this month and kind of continuing the trend that we've seen in the end of last week where these markets are just pushing higher. Let's get into it. I've got my 2 cents. Take responsibility for the outcome. You guys get it. So the overall market analysis for today was very different than what we've seen over the last, I'd say 5 or 6. And the reason being is because these markets were bound to hesitate. We'll get on the technical side here in a second. How did we finish? The Dow, the S&P, the NASDAQ down all about 0.5%. Russell down almost 2%. Took it on the chin today. Oil flat after a pretty tumultuous week last week and over the weekend when OPEC came out and said that they're going to tighten up the spigots. You get this panic, worries that gas prices, energy is going to go higher, and it's kind of fizzled itself out. Oil, I believe, is around $80 a barrel. Gold, on the other hand, had a pretty good move to the upside, 1.95%. My 2 cents on that, folks, is over here on the daily news. Down to the bottom there. Signs of slowing in manufacturing and job openings. We also had a weaker than expected, or a PCE number last week that showed a little bit of contraction. So these are all good signs that inflation is actually slowing. And I imagine what that could have caused was a flight out of the dollar and into some of the precious metals. We also saw the markets really participate and move higher. This just shows that the market is actually leaning more towards the 50% chance that the Fed won't raise in May. Now, they're expected to raise 25 basis points in May, but there's this 50-50 chance that they might just go flat and do nothing. We'll have to see. So far, these markets are really enjoying what's going on. The advanced decline line, 70% declining here, 27% advancing, and I do believe that's just because, we got to hesitate at some point after the rally that we've seen over the last 4 or 5 trading sessions. Below the 50-day moving average, we got 64%, still below 36% above. The majority of this move, and it has been primarily tech. It has dragged a few things up with it, but we are still seeing weakness in the banking sector, industrials, and in basic materials. Let's jump to the charts. So the first thing that I noticed is this beautiful breakout that we've discussed over the weekend class. Corey mentioned it yesterday as well in his update, and I just love how it just broke right above this resistance area on the beginning of the week. Now Friday of last week was a really good surge, and it did come on a decent volume. But more importantly, what I liked about it is it had no problem jumping this move from the 20 back above that 50, and more importantly above this 405, or we've been talking a lot about the 400 number. Tomato, folks. When you're talking about the SPY, 5 points isn't that big of a deal in the general overall pattern. Now, we do have this resistance up in this area. We could chop around here quite a bit. This is the SPY. I understand this had a banking issue that seemed to just be absorbed and forgotten about, and it is back up. Now, the big one is the Qs. So let's take a look at that one, because this one is definitely outperforming all of them, and it still continues to do so. This is a beautiful pattern. There's no better way to say it. It's an ascending triangle pattern that actually found a support level at the moving average. As we discussed about this, was actually retesting highs that it set at the beginning of the year after the euphoric move. The SPY is not quite there, and the diamonds aren't nearly as close as the other two, obviously, but this is a technical breakout. It's moved higher. I don't know what else to call it. There's 2,000 reasons to be bearish, and there's 2,000 reasons to be bullish. Where you lie on any of that spectrum is up to you, but where the technicals are, this is a breakout. What it was caused by, I'm not sure. Remember, folks, we don't worry about the why, more so the what. And this is a breakout to the upside. If you don't want to be super bullish on it, that's fine. Do something sideways to up. For you bears out there, they're going to be few and far between. However, like I mentioned earlier, I am seeing some pretty good weakness in a lot of the industrials and basic materials, and some of the banks are still sliding. So let's get into how we finished today. Here's the heat map, just speckled. This is kind of what I'm talking about. Let me get my pen out and start to circle some things here. So this is what's been leading here, this technology, communication services, consumer cyclical. I'll just circle this big thing in blue, and you can see it's kind of spotted today. Pullback in the semiconductors, that's because we had a pullback day, plain and simple. But look at the industrials through here. This is not looking too good. And the basic materials, these have been outperforming. Now, folks, if you got to take a look at some charts, and I don't have a lot to look at today, but like steel, Caterpillar, Deere, anything to do with those, they're really just rolling over and kind of falling apart. So there's some weakness there. Outside of that, we've got a lot of good moves in some of the FANG stocks again. Some of the stay-home stocks are starting to show some signs. So it is pretty specific on what's being purchased and what's being sold. And I'm still seeing a lot of activity in both directions. So that's why I could talk to some of my bears out there and realize you guys do have a good argument, but you got to be very selective in where you're putting those bearish trades. So where am I at? I'm at 0 for the week, and it's obvious. We're just at a bull pullback. We're just up at this area here. You could see, or excuse me, we are due for a bull pullback. You can see that we've extended ourselves. We got a nice bearish engulfing candlestick pattern on that SPY. So I'm going to stay neutral for the week, and I'm +1 for the month. So moving on to our potential trades here. I've got a couple to the bull side, Roblox, Spotify. These are ones that have been outperforming. Not a lot. Everything else is kind of hesitating. Nothing really jumped at me. Go ahead and just keep scanning and doing your trading, or go through some of your watch lists, things of that nature, and we can probably wait for those to develop. Now on the bear side, take a look at what I got here. 3M, JP Morgan. PayPal was one that Corey mentioned I thought was great, but CNC, healthcare is in there, steel, Alcoa, industrials, banking, all that stuff's being pretty weak, and it's just going to stay that way. Let's take a look at the ones that I do have. I do like Roblox Corporation. You can see it had a high base, broke out of the 45 resistance here. Nice ascending triangle pattern. It's hesitating here. So in case you don't want to try to play the surge up to 50, it might hesitate, especially if the markets do pull back in the next few days. Diagonals might be here, but diagonal might be good here, or even a vertical spread. But Roblox I thought was a pretty decent trade. Spotify is one that has the exact same pattern, both of these in the correct sectors, communication services and technology, obviously. Ascending triangle pattern, reared its head up here on Friday and then again on Monday, and it's just kind of hesitating. So 130 or above, another diagonal candidate to the bull side. Now on the bears, this is kind of what I saw across most of the industrials and the basic materials. If you guys want to go ahead and take a look at those charts, you'll see these candlesticks, just red candlesticks today. Everything just rolled over. This was definitely on my bear watch list right around, I believe, the same area. So Tuesday of last week, I was looking at the exact same pattern. It took a bounce. It used that 405 here as resistance, 105 here as resistance, and started to roll back over. So I like it again as a bearish trade. Alcoa is another one in the same idea, same basic materials. It's got that same rollover candlestick. The thing that I thought was a little bit interesting about this is it did have a rally towards the end of the day, but in essence it did confirm that rollover pattern or that bear rally up to the 42 and shows that it could continue to be bearish. JP Morgan, I figured I'd throw a bank in there, and it's kind of done the same thing. It's hitting that descending 20-day moving average here. It's hitting that 130 resistance. It looks like it's rolling over. It did finish off of its lows for the day, but I still think it's pretty weak. Something sideways to down, maybe a short-term target here at about 125. So where you find it is where it is. The markets are technically overextended, and I'm not going to treat them anything more than just that. We'll see if they pull back or roll over or maybe consolidate, but I've got to be glass half full here. Any move to the downside, for me, I'm going to look for opportunities to buy something a little bit to the upside, obviously. Any signs of slowing in the PCE and the job openings. Now, folks, that job openings is the first time it's been that low in over 21 months. So it's kind of a big deal. That makes the markets think that the Fed might not raise interest rates in May. There's a 50-50 chance that they're going to raise by 0.25 basis points. Maybe they will, maybe they won't. We'll see. The markets have been outpacing the Fed, if you guys have noticed, as of late. We'll see if that continues. ADP and jobless claims later this week. Both of those are going to be watched. Remember, those are the ones that haven't come down as of late. But when we saw this job openings for the first time in a while drop that low, and the PCE of last week, I think, is what caused that surge until the end of the week, showing that inflation is indeed slowing and maybe even rolling over. Earnings reports, just make sure you check before you get into them. They should be picking up next week. We should be getting into earnings season here in a little bit. So keep that on the back burner as well. All right, folks, thanks for joining me. We'll talk to you next time. Bye, everybody.